Hi, this is Matthew Cratter from Trader University, and today I want to talk about the Tesla earnings report that just came out. The Tesla bulls are having a field day, and we're getting headlines like Musk makes good on short burn of the century 18 months later. So I just wanted to put some of this in context and also tell you how I continue to trade this and what adjustments I'm making. So if you're interested in following Tesla or following my trades, if you think Musk is a genius or a fraud, be sure to hit that subscribe button so you can stay tuned for all the updates. So let's take a quick look at what this short burn involves. Basically, Musk in May of 2018 talked about how he was going to blow out the shorts. And in May of 2018, the stock was trading approximately where it is trading right now, around 290, 295. So this is really a kind of a clickbait headline. And if we look at where Tesla has popped on the earnings, we're basically back to, call it March or February levels for the stock. Obviously a big move, a huge short squeeze, which we'll talk about. But let's put this into perspective. Stock is still down, depending where it closes today, it's still down anywhere from 10 to 15% on the year. And this is in a year when the S&P is up 20%. So this is a stock that's underperforming the stock market by 30 percentage points. And so for all the Tesla bulls who are celebrating, a lot of them, when I talk to them on YouTube, they tell me they bought their shares right at 180. So they're obviously amazing traders to be able to buy and sell the tops. But in the real perspective here is we're still down on the year. So let's dive into the numbers really quickly from the earnings report. And I haven't seen a huge amount of discussion of these actual numbers by the Tesla bulls. Let's look at automotive revenues. Automotive revenues year on year down 12%. Automotive gross profit down 22%. Gross margin down almost 3%, 2.97, 297 bips, which is 2.97%, or down about 3%. So gross margins actually shrinking year over year. Total revenues, if we look at total revenues here, down 8% year on year. Gross profit down 22% year on year. These are not good numbers. These are not good numbers. This is not what a growth company looks like. Growth companies do not have shrinking revenues. It's just absolutely crazy. And the other thing that growth companies do not have is shrinking capital expenditures. CapEx is investment in factories and things like that. CapEx year on year down 25%. Show me any other growth company that has shrinking capital expenditures. You need capital expenditures to grow a business. Even a software business has capital expenditures. And so what we see here is actually a company that is still contracting. It's still contracting. If we scroll down here, I don't have it. I'm not going to make you wait while I find it. But if you look at their R&D numbers, now if you have a company that's innovating, it's a tech company. Their R&D numbers are down about 10%. I think it was 9 point something percent year to date. So when you have a company that's revenues are shrinking, its research and development budget is shrinking, and its CapEx is shrinking, even when it's building new factories in China. This is not a growth company. This is not a company that should be priced at such a high PE. And to make things even more bizarre, Musk in the earnings call mentioned that they're not even going to really they're continuing to make the Model S and X just for sentimental reasons. These are the cars that he touted as being the fastest cars in the world. Now, unfortunately, these are the high-end cars. They're the really high-margin cars where Tesla makes its money, but deliveries and production of these has been falling off of a cliff. And so Musk doesn't have the cash to sort of rejigger these and bring them up to date. And so we get this kind of bizarre language. I mean, this guy, I admire his intelligence, but something very, very, very bizarre is going on at this company. So why did the stock rally so much? Why is it up so much today? Well, Musk hyped that the Gigafactory in Shanghai, which used to be a mud field just 10 months ago, is now ahead of schedule. The pickup truck, the Cyberpunk pickup truck, is ahead of schedule. Again, this is more sort of phantom wear, and he's unable to sell. The mix of their products has been moving from these high margin products to the Model 3. And so what the stock market is really betting on here is, again, on sort of future promises. And Musk has a history of these things just not coming through. So if you own a lot of Tesla stock, if you have your life savings in this, as a lot of you Tesla bulls tell me that you do, please consider these things. Please take a look at this financial statement. This is just a summary. We're going to get the 10Q in a few days or a few weeks, and we'll be able to dig into this more. Something really weird is happening, though. I think what he did is really did some accounting sleight of hand to come up with the kind of earnings numbers and the kind of free cash flow numbers that he came up with. And what makes this even more surprising is if you look at the net income number here, 143 million for the quarter, 100 and I don't want to scroll down right now, but if you look it up in here, 134 million dollars worth of that. So the total earnings, the total net income for the quarter was 143 million. Of that, 134 million was government subsidies, just these regulatory credits. So again, this is a regulatory credit harvesting business that doesn't even produce that much harvest. So keep that in mind. There was a lot of hype on this call. The actual numbers show a company that is in decline, with declining revenues, declining capex, declining R&D, and just a lot of hype. So there's still this Musk premium built into this. But again, we've seen this cycle before. We saw it in the third quarter of last year, where we had a very good third quarter. There was a lot of hype, and then what happened is he wasn't able to live up to that hype in the fourth quarter, the first quarter, and the second quarter, and we saw that big stock decline as a result. So something to keep in mind: the stock still has a very high short interest. 20% of the shares outstanding are sold short. 26% of the float. After this move that we saw yesterday and today, in the after hours yesterday and today, huge amount of short covering. This is what happens when you have a highly shorted stock. So if we back up and just look at this company, their net income over the years, this is not a this is a very bizarre kind of company. You can see minus just it's a company that burns cash. It's burning less cash in 2019 than it did in 2018 or 2017. But this has basically been a black hole for capital. And as a result, Musk has had to constantly rely on issuing new debt, levering up the company, and also selling more equity. So all you Tesla bulls, you're still getting diluted. You're getting diluted by this black hole. And you can celebrate that you're up a lot today. You're back to where you were in February or March. But I see this as a very good opportunity for those who are long to, maybe come to their senses and to exit. Now let me show you what I've been doing. So I've had this long put spread on, and it's not done well, obviously, over the overnight. But the nice thing about this, and one reason I structured this as a put spread, is that I've been long the 200 puts that expire in June of 2021. And I've been short the 75 puts that expire in January of 2021. So I sold these 75 puts for about 4 points higher than here. Roughly, call it seven. I don't have the exact number in front of me, but it was something like 730. You can go back and look at my old videos to see the exact number. And I just covered right around here this morning. So I actually made 4 points on covering the short put part of the bear put spread. And so that's one nice thing about doing bear put spreads. It does give you this sort of flexibility on days like this. And this is why I traded it with a bear put spread. If you're short the stock, you're just not going to be sleeping at night. And the nice thing about these sort of long dated puts is you can put them on, you can trade around them a little bit. And that's what I'm doing. So I've removed this short put. And what that means is I have the full benefit of the long 200 put that expires in June of 2021. And so these are currently trading at about $29 per options contract. If Tesla stock goes to zero before June of 2021, these will be worth roughly $200. So you have a multiplier of roughly, let's see, what do you call it? Call it 7x, 6.5x, 7x on your money. Again, this is a risky trade. This is how I'm trading it. I think what's going to happen when the 10Q comes out for Tesla, there's going to be a lot of scrutiny paid to the footnotes and to all the financial engineering and accounting manipulation that's been going on. And so I think we continue to trade lower as a result. So I'm going to be staying long these 200 puts. If you enjoyed this video, be sure to hit that subscribe button, hit the like button, or hit the dislike button, all you Tesla bulls. And also leave your comments and your critiques in the comments below. And please try to say something intelligent, Tesla bulls. Try to engage with the facts. Try to make financial accounting arguments rather than just memes and LMAO and this sort of stuff. Thanks a lot for listening, and I'll see you in the next video.